Hi guys, in this lesson we are going to be going over trends, bullishness and bearishness, and a couple of other, jargon terms that you need to understand in order to really make the most of the live trading sessions. And in fact, make the most out of your Forex career as a whole, because if you really do not understand these terms, then you are going to struggle very, very hard. And it doesn't matter if you're listening to me or you're listening to other professionals, or even if you're listening to some podcasts. If you don't understand what these terms mean, you are not going to be able to succeed in the market. Well, that might be a bit extreme, but you are going to struggle because you won't understand what anyone is saying. So without further ado, let's get started. The first thing we are going to go over is something called a trend. Now, what is a trend? Well, a trend is something that goes on for a prolonged period of time. We could say maybe in the 80s, a trend of the time was being a punk rocker, punk music. It was trending for a couple of years and then it falls off. You could even, music's a really good example. You can see that certain tracks are trending. They're going up in the market, they're gaining popularity. Or someone's trending to the downside, I guess. That track, that piece of music, is just declining. It's not as popular as it is, and day by day, it starts to fall off. That is what a trend is. So if we look here, we can see that the market is trending in a downwards fashion. And then over here, we can see the market is coming up in an upwards fashion. Very similar, very easy to understand. And the more I zoom in, the better it becomes. Right over here, we can see quite clearly that trend's down. And this, well, obviously it's trending up. Now, there are two types of trends, guys. There is a bullish trend and a bearish trend. But first of all, let's actually go over the bullish trend. Bullishness, or a bullish trend, is when the market is moving up. You can even apply it to a single candle. This green candle here, it is bullish because the market is moving in an upwards fashion. That candle is bullishness. It's bullish and it has bullishness about it. And if the market is trending for a prolonged period of time, remember, as we said, guys, it's just something that goes on for a prolonged period of time. This bullish trend, it started down here, and from this point, look, we see it continue to go up and up and up until here, where it starts to gradually decline. And as we can understand, as I just said before, that is bearishness, or a bearish trend. The market is going down. We can see that it's falling and it's falling and it's falling, and all the way here it's falling. Another good example, these big red candlesticks, any red candlestick has bearish to it. It is a bearish trend. So if you say the market is bullish, it's going up. If you can say the market is bearish, it's going down. And if the market is trending in a bullish or bearish direction, it's either going up or it's going down in a certain direction. And you can apply that to candlesticks as well. They are either bullish or bearish. However, there is a third option here, which doesn't really happen that often. However, it's more of a horizontal movement. Let's say we look at the market right here. Although, yes, we can see from here to here, the market is trending down in a downwards fashion. We can also see that from really here on in, it starts to move in a more horizontal fashion. Rather than it being severe like this, where we can see it clearly make new higher highs, lower highs, higher highs, something that we'll go over within this lesson again, highs and lows, new ones. We can see that the market is a lot more, you can see it's compact. It's a lot more squished together. That's called when the market is accumulating. It's moving in a horizontal fashion. As we can see here, if I would just draw a trend line, we can see that although it breaks out quite a lot, look what happens. We can see that the wicks of the candlesticks are nearly coming to the exact same area. They're all moving around this area. This part of this trend is, instead of being a lot more bullish, we can see that we've got triple highs over here. One high, two high, three highs. They're all hitting the exact same area. So we can say that this market is accumulating orders. It just means it's moving in a horizontal fashion. You don't need to worry about that too much because it doesn't happen that often, guys. But if you say the market is accumulating, it just means it's slowing down. Instead of it ranging, it's going up and up, or it's going down and down like we see over here. See how it's moving quite severely in one direction, and obviously we can see it's moving quite severely in that direction. We can see that over here, this one kind of slows down. So that's what it means when we are talking about accumulation. That is what we are talking about here. So of course, if we go forwards in time, apologies guys, that always happens. There we go. So what we can see here is that there is accumulation when the market is slowing down. We have a bearish trend and we have a bullish trend. Bullishness, bearishness, and in between, we have a bit of accumulation going on there. Now, go back and go over those terms because now I'm going to go into the second part of this lesson, which is going to be talking about highs and lows. Higher highs, lower lows, lower highs, lower lows. So if you don't understand about bearishness, bullishness, and accumulation, just go over, replay this lesson. Because from here on in, we are going to be talking about something else. How we actually identify, rather than just saying it's going down or it's going up, that the market is bullish, the market is bearish, or whether it's going to continue going in that direction or it might swap into the other direction. So let's have a look here. Let's look at this bullish trend that we were talking about just before. So the market is made up of highs and lows, all right? So obviously we can see that the market made a high here, and then we made a low. And then we made a new high, and then we made a low. And then a high and a low and a high and a low, a high, a low, a high, a low, a high, a low, etc., etc., etc. But what we can see here is that from this high to this high, it's obviously gone up. It's at a higher position. So when I'm talking about higher highs, I'm going to indicate it by the letters HH, a higher high. And it's the exact same thing over here, right? If we have a look at this, and I might be able to do that, we obviously see that this high here is higher than this one. And again, the exact same thing over here. We have another higher high, and so on and so forth, because the highs are always higher. Now, when I'm talking about higher lows, I'm going to dictate it by saying HL. We obviously see that this low is higher than this one. So it's a higher low. And it's the same thing over here. We can see that this low is quite clearly higher here. And again, it's etc., etc., etc. We can just continue to see that the market is performing and having higher highs and higher lows. Obviously, we don't really see a new low around here. Again, that looks like it's more an accumulation, a really small pocket of accumulation, which you're going to see, as I said, very rarely, but it does pop up. So that's what dictates whether a trend is bullish or bearish. In this case, a bullish trend, as we were talking about just before, is characterized by higher highs and higher lows. That is what makes it up. And you can say, is the market still going to be going up? Well, if we continue to have higher highs, right, another higher high, and we continue to have higher lows, we can quite confidently say the market is still bullish. I believe it's going up. But then you can start to see this over here. The market starts to accumulate and the market starts to change. Why? Because we have this higher high over here, right? It's the highest point of the section. But we can also see at this point in time that we have a higher low continually going on. If we were to just catch it in a live scenario, right? This is what the market looks like. Of course, we've got a higher high because this high is higher. And obviously this low is lower here. But as the market continues to go on, we can see that, in fact, the market drops. No longer do we have a higher high. We now have a lower high dictated by LH. In fact, the lows are pretty much the same position, so we could say that it's a double bottom. What does that mean? This bottom is basically the exact same spot as this one over here. It's called a double bottom. Usually just means that it finds support in two areas. There's a bottom here, there's a bottom here, bottom here, bottom here. But we're not going to go over that in this section. You don't really need to know about this at this point. But what we can also see right here is what? If we advance, we can see that again, we have another lower high. And funnily enough, we have a triple bottom. Why? Because we know that we are going into an area of accumulation. We've already gone over this area. But if we continue to move forwards before the market starts to drop, look what happens. We have, sorry, that is not a higher low. This one is now a lower low, dictated by the letters LL. Because this low is obviously lower than the other one. And so on and so forth, and the market continues to move. And although that skipped forward quite drastically there, we can quite clearly see that we are now entering a bearish run. We did hit that higher high, but look, we have a lower low almost immediately. Then we have a lower high. Then, guys, we have a lower low. Then we have, sorry, if I can just do this, we have a lower high, and so on and so forth, and the market continues to go down, and still it starts to go up. And then we have basically a higher high around here, or a double top, which just means there's two highs, much like there's a double bottom, there's a double top. We can see that the market continues to do its thing, and it changes. So now we can see that the market's changed because we have higher highs and we have higher lows. And the market's obviously going down here because we have lower highs and lower lows. That's what dictates what a bearish trend is. Bullishness, dictated by higher highs and higher lows. Bearishness, dictated by lower highs and lower lows. Lower high, lower low, and so on and so forth. Lower high, lower low. Lower high, lower low. Then we've got a double top over here, and then we've got a higher high, higher low. Double top again, we've got a lower low. So that's what's going to continue to go, and you go and so on and so forth, and then you can say, okay, the market's changed now. Now it's got lower lows, or now it's got lower highs. The market is being bullish, or the market's being bearish. That's how you indicate to yourself whether the market is turning around, changing its trend, and what actually dictates what a trend is. So obviously, please go over that, guys. Replay it, make sure that you understand it. And now I'm just going to go over the final two things that I briefly encountered before. So you are going to see these two terms really in areas of accumulation. And it's what I basically spoke about before. These two highs, right, we can see at one point it came into a low, came back up to a high, came into a low, came into a high. These two highs are basically at the exact same level. So it's called a double top. So if I just put that on top, we've got a double top because there's two highs here. Now you can have a triple. There might even be some times where it's a quadruple. It's very rare, but it can happen, guys. Apologies about that. What we can see over here, again, is basically around this area, we have basically a triple bottom. So as I said before, as there can be a double top, there can be a triple bottom over here. And I'll put that on the bottom. One area, two areas, three. It's definitely wicking in the exact same area. It's very close to hitting this exact same line. And as you can see over in this direction, again, what we're talking about, we've basically got, again, another double top over here. Doesn't exactly have to be perfect. If it's very close or on the line, that's enough for it to be called a double top. And it's the exact same for triple bottoms, double bottoms. What do these things mean? It just means that this line that it's touching multiple times is very strong. So it's finding a lot of support and resistance. So obviously when we hit support, it's much like a trampoline. That's what we're talking about when the market finds support, because it hits these areas and it bounces up, hits the area, bounces up, hits the area, bounces up. Whereas this one, it's resistance. Hits this area, falls down. Hits this area, falls down. In fact, we could probably say it's almost a triple top over here. In fact, I would say that's a triple top. So we'll change that. What happens? Hits this area, falls down. Eventually, it does break through. Like all things, that's going to happen. But that's what I'm talking about. When you find triple bottoms, double bottoms, quadruple bottoms, you are finding support. It's like a trampoline. But when you are finding triple tops, double tops, quadruple tops, you are finding resistance. The tops are ceilings, the bottoms are floor. So the ceiling, you find resistance, the bottoms, you find support. So that's it for this episode here. This lesson, I should say. I hope you found it very informative. If you need to go over any of the stuff, please do. All right, I will see you in the next lesson, guys.